Hello, everyone. Welcome to the Pro Trade Room Plus, the U.S. Jobs Report. Also, want to welcome everybody who's watching us on YouTube this morning. My name is Lee Goldstein. I'm the Trading Director at 10 Minute Trades. Please remember, I'm not a financial advisor. Everything we discuss is for educational purposes. It is possible to lose money trading futures, so let's get started this morning. Okay, everyone. Seems like we're always in the trade room. It's like Groundhog Day. Rinse, repeat, rinse, repeat. Here we are. Okay, sound is good. Everybody can see the charts. Let's get the news up so you could see what's going on in terms of the event and the elements that make up the news. Also, the brokers are raising margins for this report. So that tells you definitely that this is a risky report in their minds, certainly, and we know it to be true. Let me get the news going. So trading, particularly the indexes, are the instruments that they're raising rates on, and the margins. The ES, the NQ, those are the margins in particular that the brokers are raising. Okay. So you just want to trade this report carefully, understanding that it can be extremely volatile. Give me 2 seconds. I'll show you all the elements that make up this news. Now, what's interesting is today there's less going on because Canada already had their jobs report. I think it was last week. And the Canadian job report, probably about 80% of the time, trades with this report. And then every now and then it doesn't. Why they do that, I don't know why it is that way, but it is. So these are all the elements that are in the unemployment report. And the important ones are that hourly earnings are important, but obviously the non-farm payroll, they're expecting 180,000. That's the main piece of news that drives the market. The unemployment rate has an effect, as does the private non-farm payrolls. Those are the three biggest numbers that affect this report. The main one is the non-farm payroll number. That's the number that everybody pays attention to. Now, the brokers are saying that gold is not having the margins raised, but gold is probably the most difficult instrument for trading this report. And no, it's always been ZN, Roz, always. We've never had a setup for ZB. You can trade ZB on this report, and I've been thinking of trading ZB today, but my hesitation is ZB can be more challenged in liquidity than ZN. And this is a report that can be challenged with liquidity. Yeah, I've been looking at ZB this morning. I misunderstood what you were saying. Yeah, I was looking at ZB. Okay, let me pull out the DMM and thank everybody for coming. So we have 3 events today. We've got non-farm payrolls. We'll be back at 9:30 for preliminary University of Michigan and WASD. So it's a triple header Friday. All right, so non-farm payrolls on gold. So gold, again, very difficult because it's very, very fast. Lots of whips, okay? Whip, whip, very fast spike. Okay. So gold can be really fast. That's why big bracket, big stop. Okay. A lot of risk on gold. You're risking more than $300 per contract on full size gold. And if it has a big move, look at the size of the moves. Um, if I were trading gold, I would be okay with like a 20 tick first target and possibly a 50 second target if I were trading two. But you've got to figure on if you're trading two gold, you got to figure that you're risking minimum $1,000 minimum. I know the stop is 35, but it could be fast and it could take the market time to get out. So you just want to keep all that in mind that your stop might be slower and larger than you expect. That's the kind of report this is. So that's why there's a lot of risk associated with this report. So I'm just curious. I'm curious if I look at the volume today, for instance, if I look at the volume on ZB and compare it to ZN, just looking at the daily volume, my guess is ZN is going to be significantly higher. Look at the difference. Almost 300,000 more contracts. So I'm going to trade ZN. I like trading ZB because for the same two contracts, you can make double the profit. But I'm going to be conservative and trade. I almost always trade ZN, so I'm going to stick with ZN on this report. That's what I'm going to do. Part of me would like to do ZB, but now I'm going to keep the news open to the side. All right. I'll have the news open to the side. I'll also be hearing the news result in my headset. So as soon as I hear what's going on, I will speak the news. Now, we did something on earnings yesterday with the software. That's not a bad thing to do. The issue is this could be a very fast moving report. And sometimes I like to do as little software automation as possible on a super fast report. Let's just take a quick look at last month, what happened. And I'll look at 3 months. So last month on bonds on the left, gold on the right. That's usually what we look at. Now, people always ask, does this work on the ES? Does this work on the NQ? We all know, or you should know, this report moves almost every single instrument. We try to pick the safest instruments to trade and the ones that have been the most consistent. Bonds have good liquidity. Also, in terms of margin, the margin is not nearly as high as it is on the indexes. But I have to say that bonds have only been getting target one on the last couple of trades. There haven't been big moves. There haven't been big moves on this report on bonds in a while. And gold is just a wild instrument on this report. It is what it is. It's volatile and it's fast. It's the nature of gold. Okay, second thing. Second thing. So this was bonds last month. And you could see it wasn't bad. I mean, it wasn't bad. But you had to be patient, and it was, if you were patient, the report did move. Gold had an early move, very big early move to the downside, or a big early move. Now, sometimes it can be related to how spread apart your charts are also. So it went from 98 to 96.5. I would call that a pretty unusual early move. And then boom. So gold sort of gave a warning about trading it. It still worked last month, but it did. That sometimes is a heads up that you might want to be careful if, or not trade the instrument. I don't like to see pre moves like that. But then gold had a reasonably slow move, large move. Okay, Ben, I was going to say probably just make sure your charts are on the right screen, uh, live versus sim, etc. And 2 months ago, in October, had a good move, hits the first target. Now, one of the issues too is we're using maybe our second target on bonds is just too big on this report. Instead of trying to manage out, maybe it might not be so bad to use a little bit smaller second target so that if there's a move that has some slippage, October had some slippage, but it kept going in the direction of the event, of the move, and could have hit a reasonably sized second target. But sometimes I'm setting a second target too big. So it's just something to think about in terms of the target, the second target in particular. And then September was a whipsaw. The breakout trade's greatest enemy is a whipsaw. When there's a whipsaw, most of the time there's nothing you can do to save it. And I get emails all the time. This is a trap trade because one time it whipsawed. And it's not the case. Just because something whipsaws doesn't mean there even is a tradable trap trade. Sometimes it can give you a heads up that maybe a trade is a trap, but you then have to go back and do the research. You know, the spike sheets that we create, looking at how an event moves over a significant period of time. You've got to scope it out and figure out, is it just a one-time whipsaw or an occasional whipsaw on a report that has occasional whipsaws? Or is it really a trap trade? Non-farm payrolls is probably not a trap trade unless you're using gigantic tiers. Gigantic. So there were two winning bonds and one whip over the last 3 months. And gold, it looks like there were two winning golds and similar, and then a stop in September. And August too was August. I remember gold. I remember people were able, some people had their first target get hit. I remember it being a very fast reversal in August, but it was able to hit targets and then it reversed, which is very, very interesting. Bear with me 1 second, folks. I have definite streaming issues, I'm sure that my streaming is not right. I don't know if I can fix it. Let me see if I can. I hope I just did. No, I don't know. Okay. Um, so here's what I'm going to do on my trade. Remember about margin if you're trading. So ZN, and I'm going to load a template. So I'm going to click on strategy. And I'm going to click on template. I'm going to load. And I'm going to look for, I probably have tons of templates on this report, probably under NFP, non-farm payroll, which is the official name of this report. There's all my NFPs, Euro and ES, ES range trade, gold. We've had a lot of different ways that we've traded this. We've traded oil on this report. We've had quite a lot of different instruments. We've had the NQ on this report. I mean, you name it, we've traded it. So ZN has a bracket of 7, and I just don't think we're going to hit 28 ticks of profit. It just, certainly in the last 3 months, it hasn't come anywhere near doing that kind of trading. So I'm just going to trade 2 contracts. And go very close to the DMM. It's a bracket of 7. And I'm going to use 6, and I'm going to trigger at 829.58. Targets of 6 and 15. And remember, your targets can be between 6 and 25. It's not unreasonable. The stop is 12. If my first target gets hit, I'm definitely going to move my stop to break even -2. And that's all I'm going to do on the automation. Make sure that my account warnings are off. And we'll check our time sync. Before sync, I'll check my brackets first by setting the time to 0. Enable the trade. And there's our brackets. And I'll put the time back. I need to get rid of the pivots I have. Give me a second. I was doing experimentation with pivots. We have new pivots that have S4 and R4. I just have to work on them. So I just want to put the normal pivots back. Okay. Okay. So let's check those brackets one more time. Make sure everything looks good. The time. Okay, so putting the time back to 8:29:58, not 78, 8:29:58. Targets anywhere between 6 and 25. Stop is 12. And target 1 stop move doing a break even -2. The other interesting thing that I have been thinking about using more is starting trailing when target 1 gets hit. Starting trailing when target 1 gets hit. That means you have to do even less automating of your trade, because if a trade starts going in your favor, the stop is going to move with your profit. So you can turn the trailing stop mode to on, start, not to on, but to start at target 1. And if you do tick for tick, and the number of trailing ticks is 1, it'll move 1 tick for each tick of profit. So can do that. Maybe I'll leave that on and show. We used it yesterday in the Broadcom earnings. So I'm going to put my charts on live. Put the software on live, the charts on live. Okay. Any questions about the bond setup? Broadcom, tiny winner. It changed direction. It had a good move, but it was a chop. It was chopped up, it chopped down, it chopped all over the place. But it's definitely a tradable setup. The bond setup is a bracket of 6 or 7. Activate 829.58. Targets anywhere between 6 and 20, and a stop of 12. And a stop of 12. And you can use target 1 stop move if you use that feature to move to break even -2 or 3, or break even, however you like to move your stop. Let's check the time sync. Time sync. By going to the website, time is, just making sure our time is in sync. I'm just watching gold. On this report, I really don't want to be distracted with multiple setups. The new software, Lewis, it unfortunately, the programmer goes away for 2 weeks in the middle of the holidays, right at Christmas. So I don't know if we'll make it before Christmas or not. That's the question. Worst case, January. That's the worst case. He said he's working on it already, which surprised me. So it always depends on how the testing goes. That's the biggest issue. How does the testing go? So margins, you can assume that the indexes, and I would think bonds also, but they told me that they're not raising the margins on gold. And it's a little bit frustrating because they don't really have a specific sheet that says, well, here's what we're doing. These are the instruments that we're raising the margins. It's very nebulous. But to give you an example, if you're trading a cash account and you're trading the NQ, and I can't stand the new way that they do the margins too. The sheet is really much more confusing than the old one. But the NQ, it's 4 times 1,000 per contract. So they're raising the margin to 4,000, right? 4 times the day trade margin. And you really should add 1,000 to that, because you have to have money in the account to cover more than the minimum. And when you do a breakout trade, you have to double it. Each contract is 2. Each order is 2. So if we have 4 brackets, 2 above and 2 below, it's 8 times 4, it's $32,000. Now, the prop companies, they don't do anything on margins. I would assume, because it's not live, right? Do they even have any rules about margins these days when you're trading the props? I don't think I don't think they're raising bonds. Let me find out. Yeah, hi, just a quick margin question, not account specific. Are bonds raised for the non-farm payroll report on NinjaTrader? Okay, right, but not gold, right? They told me not gold, but all the in. Okay, thank you very much. Bonds are raised. Bonds are raised. So for trial mode on prop, there are no margin issues. Prop, there's a lot of strange, different issues that you have to deal with. Because if you think about it, I mean, I can understand why they have rules about brackets because it's not the same type of a data feed. It does make a big difference in the way those reports trade. So the bond margin, it's expensive, Roz, because you're looking 8,000 per contract. I don't think you have enough cash in your account. If they're really raising the margins, it's 8,000 per bracket. Plus you need a little bit extra because they're saying 4 times the day trade margin now. But I don't know if they've changed. It looks like they've changed the margin. It used to be, I thought it was $500 on ZN, but it said 2,000. So, high margin trades mean volatility and higher risk generally. Think about the reports that they raise the margin on: CPI, PPI, FOMC statement. Um, Trying to think if there's any others that they're raising the margin. They say some of the earnings now they're raising margin, which is really annoying. And it's completely random. It's completely what they want to do when they want to do it. You don't even know exactly what time they start the margin raise. They say like 10 minutes. AMP is a little bit more clear about when they do it. They send an email. It's better structured, better structure with AMP. We're using CQG for our live data. We've used Rhythmic, we've used CQG. Those are the two that we've used interchangeably, pretty much. I never saw any difference between the two. Rhythmic has some different instruments that are available. They did years ago. I think some of it has changed. I haven't looked at Rhythmic in a long time. Never used Kinetic. All right, we've got a minute. So essentially, my stop is going to be pretty much almost automatic. If target one gets hit, then my stop will move to break even -2. And then it should start to trail if the trade is in profit. Watching gold on the right. There's the brackets. All right, so tiny, tiny profit because my stop was too darn close. Too darn close. Um, I was getting ready to move my stop and it still got hit. Tiny little profit, target one, target one. If you didn't touch your stop, it would have been a much bigger profit if you didn't touch your stop. So we talk about this all the time. Sometimes automation protecting the stop is just, it just creates too small of a trade. And we'll watch the video. We'll watch the video. Unfortunately, it pulled back to where my stop was. The news looks like it's pretty mixed. Let's take a look. I'm assuming, I mean, I'm not going to assume anything anymore from the news on this report. I don't think anyone should have lost money on that trade. I don't think you should have lost money as long as you had reasonable first target. No, I would be surprised if you lost money on that trade. So looking at the numbers, though, what happened in the numbers? A little bit less on the jobs than expected. So the market likes that. What's interesting is let's take that back. The non-farm payrolls were higher. Were they horrible? No. I can't stand this program sometimes. This website drives me crazy. The news was pretty mixed, it looks like. So you've got average earnings were up. The non-farm payrolls were higher than expected, okay? But not horribly higher, not horribly higher. The private were a little bit lower than expected, okay? So I don't know. The unemployment rate is lower. You know, let's see what the NQ and the ES are looking like. We'll look at the video in a minute. So type in what happened. Type in what happened to you on this trade. If you made money, didn't make money. Some of you are typing it in. Roz, I think that you've got to seriously think about a VPS with all these issues of the trades not canceling. Trades not canceling. I think it's a necessity. It's really, yeah, it sounds like it's a necessity. Okay, so Chantal is saying that everything whipsawed. Everything whipsawed. What about the euro? Chantal, did the euro whipsaw? Jesus, I am an idiot. Don't ever do what I did, people, and put on a trade when you're not expecting to. I can't believe I just did that. Hang on a second. The ES, the NQ. Did the NQ whipsaw? The NQ whipsawed?
I told you, ES and NQ.
And NQ whipsawed.
Just read what I just typed.
Oh, stop. Yes. Okay, so gold looks like it also popped up and dropped down. And then the euro. The euro had a perfect, really nice candle. Gold. So gold, 2044. Gold did not survive this bracket, it looks like. 44. Well, 30. It could have moved 30 ticks in the wrong direction. Gold, it's possible that it moved in the wrong direction. MGC had a spike of 40. Let's look at the video. Give me 1 second to save it. Uh, 2 seconds, hang on. All right, the main move that we had on bonds, it was actually a pretty good looking move. All right, so here's the bond move on the left. So my stop moved to break even, and then you could see the price. I was getting ready to move my stop to safety to go completely flat, and the price still pulled back through where the stop was. So the only way to get that bigger bond trade would have been not to move the stop at all, it looks like. It did pull back. It wasn't enough, obviously, to stop you out, of course, but if you moved your stop to safety, it hits the first target and it pulled back above where my stop was. And then it has a secondary move that was fantastic. A really good secondary move. And I didn't watch gold. Let's take a glue. I'm assuming gold went up first. Gold on the right. You can't even see what happened on gold. It was so fast. So all of a sudden, you look at gold, it's going down, but there's a giant whipsaw to the upside. So I would assume that it went up first. It's pretty, that is fast. That is fast. That looks like the only way you can see what happened is by looking at a much, much lower time frame chart at 8:29, let's see, 8:30 exactly. Yeah, it's amazing. That's amazing. That move. If you look at a one range chart, I'll bet if we look at 830, it's going to go up first. There's the move down, and there's the move up that you didn't even see with the naked eye. That's the move we did not see with the naked eye on gold. Look how far it went up. Low volume, probably no volume. And it was quite a few ticks because look, we had our DMM on gold had a 25 bracket and it would not have survived that. I don't think. Let's see. So if I put a line on, if I put my cursor on 4360 and it goes to 48, no way. Didn't survive the 25 tick bracket. You probably would have been filled right at the tippy top of that candle, right at the tippy top. Because you could look at the individual volume on those candles with the data box, and you can see there's 3 contracts, 5 there's no volume. So it goes all the way. You probably wouldn't have gotten filled till the very tippy top on a long, right? Because it was more than the bracket. It would have burst through. It would have burst through, filled you to the wrong side, and then reversed. So gold would not have worked. All right, so it looks like gold, and I would assume micro gold did something similar. It does not always move the same way in terms of number of ticks, but if we look at the way it moved at 830, my guess is it did something similar. So here's micro gold. Let me get to 830. Here's 830, same move up, it looks like. So it would have filled you long, it looks like. And it wouldn't have filled until, again, volume very low. You can be sure if you look at the data box if you want to see it. Ones and zeros and fives and threes. You're not going to get filled till the top of that candle. So gold, as we know, gold is difficult. Bonds were not bad. It was all depending upon how you managed the stop was the key to bonds. And the euro seems to be trading much, much better, much, much better. So maybe we'll consider bringing the euro back for next month because it seems to be definitely trading much better than it has been in quite a while. All right, any questions? Yeah, there was plenty of volume on bonds, it looked like. ZN is 324. But we had no problem. I mean, there was some slippage. It wasn't a disaster today. It wasn't a disaster. This was the bond move. Watching it one more time. So clearly, if we just left the stop alone, it could have been it would have hit both our targets, leaving the stop alone. So maybe I'll be definitely note it in the journal and maybe be less aggressive, especially on this report. It's been chopping at entry. And then today was one of the best moves in months. Over the last 4 months, this was one of the best moves, but it was a secondary. It was like a secondary move, but still a very good move. Okay, everybody will be back at 9:30. Let's double check the schedule. Back at 9:30. Let me find the schedule. Hang on. So we'll be back at 9:30 for preliminary University of Michigan. So if there's no other questions, I'll see everybody at 9:30. Any other questions? Any other questions? No, everybody's good? Okay. So I'll see everybody at 9:30. See you all in a bit. Okay, folks. And thanks everyone on YouTube. Appreciate it for watching our stream. I'll see everybody next trade room. Little bit of time. Not less than an hour. Okay, everyone. See you in a bit.